Ghana's inflation rising to 33.9% in August, up from 31.7% in July, according to the latest Consumer Price Index actually inflation report by the Ghanaian Statistical Service. Joining us to talk further from Accra, Fred Duvor, Managing Director of Apakan Research. Fred, good afternoon to you. Thank you so much for joining us. So this new high now, what are the drivers for this latest August headline inflation figure in Ghana?
So the August numbers was a combination of sustained cost pressures from both the food and non-food inflation baskets. However, the annual growth in food inflation for August dominated the price movement in the basket. It recorded a growth of 34.4% compared to a growth of 33.6% in the non-food basket. So this was driven largely by the inflation in the food basket.
Speaking of the food basket, food inflation 34.4%. What about the subclasses that drove that figure?
So a total of about 8 subclasses in the food basket drove inflation, but this was primarily spearheaded by the oils and fats, which recorded a stunning 74% year-on-year inflation. The fruits and nuts subclasses also contributed significantly. It recorded a little over 49% year-on-year growth in its prices in August. So these two subclasses were the main drivers in the food inflation growth.
Yeah, we're seeing here, and this is actually from you guys, from Apakan Research and the Ghanaian Statistical Service. As far as the average Ghanaian on the street is concerned, is this more pain?
Well, it feels painful too, I must say. It kind of keeps getting worse. Just a few weeks ago, utility prices were increased by about 23% by the Public Utilities Regulatory Commission. Food prices are going through the roof. Transportation prices are up because ex-pump fuel prices are up. So the average Ghanaian, I must say, is not very happy about the situation.
Is monetary policy working? I'll take a look at the benchmark rate. I think that was a 300 basis point increase to 22%. Also, the cash reserve ratio, 15 basis points rise. Another 300 basis point rise from 12 to 15. Is this having? Inflation keeps rising, so I guess I'm answering my own question. But is it working?
Well, I cannot say it's not working. I think you will remember in July, inflation spiked to 31.7%. And that caused the Monetary Policy Committee of the Central Bank to announce an emergency meeting in August, which was out of its usual meeting calendar. Following that meeting was when they increased the policy rate by 300 basis points from 19 to 22. And they had a step process for increasing the cash reserve from 12 to 15%. One thing that I can say, however, is that on a month-on-month basis, the August inflation has recorded the lowest growth in the CPI levels since the beginning of the year. So, and it was at the beginning of August that they introduced that spike in policy rate. So for us at Apakan, we had actually projected a higher inflation print for August. We are projected around 34.5, 35%. This was on the back of a steep decline of the cedi that we experienced in August. So I believe that the rate hike in August by the Monetary Policy Committee must have played a part in us not recording an even worse figure than the 33.9 that we have just seen.
Okay, the MPC, the Monetary Policy Committee meets, I believe, September 26th. Do you see any further rate hikes with what we're seeing with inflation?
I doubt it. We and this is because we have seen a relative stabilization of the cedi in the past few weeks. This is on the back of improved USD liquidity following the government's receiving proceeds of the $750 million loan from Afrexim Bank. We also see that global crude prices are trending downwards. And that is reflected in export prices. We are expecting that fuel prices are going to go down at the pumps in the next week. So the risk to inflation expectations, in my opinion, is relatively moderate compared to what we have experienced earlier on in the year. So when you couple this to the fact that economic growth being projected is weak, I think the committee would likely hold the rate at 22 and see how September inflation plays out. If the situation worsens, however, then maybe a further increase may be on the cards in its November meeting before the holiday season in December, where there's usually price hikes in the markets.
All right. Now, I think you mentioned the CD is down almost 40% year to date, second worst performing currency in the world after the Sri Lankan rupee. Any stability going forward for the currency?
I am optimistic about the stability of the cedi in the coming weeks. Like I mentioned earlier, when we received proceeds of the 750 million loan from Afrexim, we could feel its impact in the stability of the currency. The central bank has increased the reserves of the central bank, and the central bank is now able to play a more important role in the market through its forward auctions. I think it sold about $60 million just last week. We're expecting next month $1.3 billion thereabouts from cocoa syndicated loan. So this would even increase our reserves more, and I see the central bank being equipped even further with more dollars to be able to help support the cedi. So in the next few weeks, in the next months, I expect that there will be depreciation, but not at the pace that we have seen from the beginning of the year to now. I project maybe a further 2 to 3% decline of the cedi between now and the year end.
Okay, thanks for that. Any updates on the IMF loan or IMF discussions with the Ghanaian government?
Well, there has been nothing official so far. Just a few whispers about IMF's opinion on our debt situation and whether or not there's going to be debt restructuring. Is it going to be local debt restructuring or foreign debt? So there's a lot going on in the rumor mill, but there's been nothing official yet. The IMF has, however, been in the news reiterating its commitment to reaching a deal with Ghana and supporting Ghana, hopefully before the year ends.
Great stuff. Fred Duvor, Managing Director, Apakan Research. We'll see what happens with the Monetary Policy Committee on the 26th. Thank you so much for joining us.